and welcome to today's update. Today is 10th of October. Um, Today was another negative day in the market. S&P 500 fell 27 points to close at 3612. Nasdaq 100 lost 1% to close at 10,926. So you looking at the daily chart of S&P 500, you can see that S&P 500 closed just above last month's low of around 3685. S&P closed at 3612, so that's around 27 points above 30th of September low. Let's quickly review the levels that we should be watching out. We've got two important economic reports coming out this week. Wednesday and Thursday. Wednesday is the PPI, Producers Price Index, and Thursday is the Consumer Price Index. So we'll just have a quick look at those first. So see, this is Wednesday. So we've got the PPI. So this is the PPI. The year over year the market is expecting an increase of 8.4%. Last month it was 8.7%, so that would be a slight move to the downside. The core is expected to remain unchanged, so last month it was 7.3%. The consensus expectation is also 7.3%, so the core is likely to remain unchanged, but the headline is expected to tick down a little bit. So this is on Wednesday, and then on Thursday we're going to have, so this is on Thursday, so on Thursday we're going to get the CPI, so this is the year over year. So last month the reading came in at 8.3, so the prices rose at an annual rate of 8.3%. So the consensus market is expecting an increase of 8.1% on Thursday's report. So you can see that it's still going to be quite elevated. It's still going to be above 8% and not much below from the previous month. I mean, 8.1 would be well below the June high of 9.1%, but from the previous month, it's just going to be modestly to the downside. I think if the number actually came in below 8%, let's say 7.9 or 7.8, something like this, market could really get excited about it. So these two reports are going to provide additional information as to what's happening to inflation. And that also determines what happens to the bond yields. So those two, and ahead of these two reports, it's unlikely that the market are going to make any significant rebound from current level. So let's quickly also look at the bond yields just to see where they are. So we're going to look at the, so this is the Fed Funds Futures. So this is the April Fed Funds Futures. You can see that it started to move higher. It's now coming up to the previous high of around 4.8. It closed today at 4.7. So this is now gradually moving higher. If we look at the March contract, the March contract is at 4.64 and the previous high is about 4.7. So you can see that it's not too far from the previous high. The 2-year is also close to the previous high. The previous high was around 4.36. Right now it's around 4.33. So it's almost there. And the 10-year is close to the previous high of 4%. It's at 3.96. So just 4 basis points. You can see the yields have started to move higher, and that's putting pressure on the market. And if 10-year goes above the 4%, and that would be negative for stocks. So the bulls would be hoping that maybe the CPI number report would show that there is moderation in inflation, and that might bring the yields down a little bit. But if it goes above 4%, there is reason to be concerned. Because when 10-year rose above this level, 3.5%, and rose to 4%, that really put pressure on stocks. If yields make another new high and goes above 4%, I could see market coming under additional pressure. And we'll talk about some of the levels that market could fall to. So let's now have a look at the levels. So S&P 500, we'll start off with this. So you can see that it's trying to hold so this is the weekly chart. So this is the weekly 200 day, this line. So you can see that it's trying to hold the weekly 200. So if this level is breached, then the next level would be this 3500. Now 3500 is important because I've got a fib drawn from the COVID lows to the highs that were set earlier this year. So this 0.5 is a 50% retracement of this move, and that brings us to about 3500. So S&P 500 closed at 3612, so that's roughly 110 points or so below. So that's not that's not too far. So if we see bond yields continue to move higher, or if we see the CPI number come in stronger than expected on Wednesday and Thursday, we could see S&P 500 test the 0.5 level, the 50% retracement. Below this level is the COVID high, pre-pandemic high, which is right here, and that is sitting around just below 3400. So that's at 3380 level. So that's this purple line right here. So those would be the two levels to watch out for. And below there, obviously, we have the 61.8 retracement of this move. So that's around 32. So let's see, if the market falls to these two levels. Let's see, what sort of interaction we have before we, expect a move down to this level. If we look at the SPY just quickly to see what the corresponding levels are. So the corresponding levels would be 349, which would be the 50% retracement from the COVID lows to the highs set in early this year. And then the pre-pandemic high is around 337. And then you have the 61.8% retracement, which is some ways below around 318. You can see that at the 50% retracement, there's quite a bit of weekly interaction with this level. So there could be some reaction at this level. Looking at NASDAQ, the levels to watch out, this is NASDAQ 100. So the weekly 200, it closed below the weekly 200. The next important level is the 61.8% retracement from the COVID lows to the highs set early this year. So that sits at 10,600. NASDAQ closed at 10,926. So this level would be around 325 points below where it closed today. And below there, obviously, we have the pre-pandemic high, and that sits around 97.36. So depending upon what happens on Wednesday and Thursday, if the CPI numbers come in stronger than what the market is expecting, some of these levels could very much be in play. Bulls would hope that that's not the case. Market is able to kind of bounce, and start to move higher. So a lot is at stake on Wednesday and Thursday because these are crucial reports. And if these reports remain strong, then there's nothing for the bulls to kind of look forward to. So that would be a very important report. Looking at QQQ, so the relevant level would be around 259, which would be the 61.8% retracement. It closed at 266, so that's another 7 point from where it is, and the pre-pandemic high is around 234, 235 level. So those would be the levels to look out for. If we look at in a smaller time frame, hourly time frame, just to see the structure that's forming. So this is S&P 500. So this is an hourly chart. You can see that there is a downward sloping channel. You can see that it interacted with the bottom of this channel. So if it were to come to the bottom of this channel, this level would then be the 3500 level. So this would be 3500. So that would be the 50% retracement that we saw. So if I go back to the weekly chart right here, so that would bring us to this level. So if S&P 500 were to slide down, and reach the bottom of this channel, this would bring it to the 50% retracement. This is an hourly chart. I can see that the momentum indicators are quite weak, but oversold. You can see RSI is in oversold territory. MACD is below the zero line on an hourly basis. It's trying to make a U-turn right here. So we'll see whether this materializes. For S&P 5, so SPY again. So this is the downward sloping channel. So if it continues to move down and gets to the bottom of this channel, so we're gonna have, so this would bring it to the 50% retracement. So if it's able to get back above the midpoint, then the resistance would be to the top of this channel. So this would be obviously before there would be other resistance, which is right here around 370, and then the top of the channel, which is around 376, 377, around that level. For NASDAQ 100, so again, it's also moving lower. The bottom of the channel, you can see there have been quite a few interaction. So bottom of the channel would bring it close to the 10,000, it would be just above 10,600 level, but it could undercut a little bit, and that would bring it to the 61.8% retracement. So QQQ, you can see that all of these are kind of sloping down, and they're, and then if they reach the bottom of the channel, that would bring all of them to the respective fib levels. So those are the levels to watch out for. So for QQQ, resistance would be around 275, and then next level would be around 283. So we'll see what happens, in the next day or two. I'm not expecting any significant move to the upside ahead of the report. I doubt that investors would be making any big bets. So market could remain choppy to slightly to the downside, because on a daily basis, some of the momentum indicators are still weak, which suggests that we could have a little bit more to the downside. So we'll see how things play out. Let's look at some of the other indices like dollar. So let's look at dollar. So this is US dollar. It rose today 0.33%, and it's continuing to move higher. Now, if I look at the chart on a 2-hour basis, I can see that it's forming a bearish rising wedge. So we need to be aware of it. On a daily basis, obviously the momentum, the chart is quite strong, it's quite bullish, but we need to be aware that there is a bearish rising wedge forming. Also, as it's moving higher, I'm noticing that RSI is kind of lagging behind. MACD is also, it just crossed and then slowly moving lower. So it looks like this upward move is kind of happening on lower momentum. So something to keep an eye on, and that would be consistent with the bearish rising wedge on the DXY. So we'll see how DXY plays out in the coming days. Gold continued to move lower as dollar moved higher. So gold is now gold fell almost 2%. So it still is within this channel. So it's kind of in the middle of this channel. If dollar rises further, then we could see it coming towards the lower end of this channel. So there'll be some support around 1625 right here, and then the bottom of the channel will come into play. Oil had a negative day. It lost almost 2.5%. So it still is above this breakout level. The momentum indicators are moving higher. So MACD is at the zero line, so it hasn't quite moved above. Moving above would be positive. So we'll see, whether or not it's able to, there's additional momentum. RSI reached the 61.8 level, RSI, and then pull back. So you can see that this level has been an area of resistance when RSI reached this level. This is RSI 61.8. I can see that on stochastic is now reached an overbought territory. So we could see some profit taking at this level. VIX rose 1 point to close at 32.50. So it's now halfway between the 27.5 level and 37 level. So VIX is still moving higher, but I'm noticing that on this leg up, RSI is sort of lagging behind a little bit. MACD is also, flattening out. So if it goes up even more on lower momentum, it might suggest that this move could fade. So we'll see, we'll see how things play out in coming days. But still remains very high. 32.5 is quite high, which means that you have to be trading rather than, this is not a buy and hold kind of a scenario because of high volatility. It's more a trading kind of an environment. You have to be quick, you have to be fast and nimble. When volatility is so high, profits can go away quite quickly. In terms of looking at some of the sectors, I mean, semiconductors, they've been under a lot of pressure. AMD basically, started putting pressure on Friday after announcing weaker than expected results in the coming quarter. So you can see SOXL has been moving lower. It's now coming up to this trend line, which it tagged, a few times and bounced. So we could see some reaction, but it very much remains in a downtrend. Momentum indicators are weak, so I'm not seeing anything positive. Any bounce, any bounce would be like a oversold bounce. But until the moving average, until the momentum indicators start to move higher, any rally is likely to be short-lived. But there are some, but it is kind of oversold after this massive decline. In terms of individual stocks, so we look at Tesla. So Tesla has now reached the bottom of this channel. So there is support here. So we'll see whether or not bulls step in and push the stock higher. Now, if I look at the hourly chart, you can see that it's forming this falling wedge. So falling wedge tends to be a bullish pattern. So we'll see, how things play out in coming days. I mean, this could be consistent with the fact that it is oversold. You can see that it's been, declining a lot since reaching a high of around 314. It fell all the way down to around 220. So that's a big drop, and it is oversold. I mean, but the momentum indicators are weak. You can see MACD still heading lower, not seeing any sign of reversal right here. RSI closed at just under 27, oversold. Stochastic is oversold. So there could be a short-term bounce. Like if I look at the moving averages, you can see the moving average, the 20 and 50, they're in the 270 region. And the price is around 223. So there is still quite a bit of distance. And so the price could move up a little bit, and the moving averages could come down, and they could meet somewhere. I very much think that it would want to go towards the moving average, because even in the past, when we see right here, when the price fell away from the moving averages, it bounced and then caught up with the moving average. So I do expect some kind of a oversold bounce, and then get back towards the moving average. Apple is again just above the previous low, around 138. Needs to hold this level. If it forms a new low, then it just exposes the mid-June lows. So it needs to hold this level and maybe move higher. You see the moving averages are coming, so they will act as a resistance. But the moving averages have started to widen, so which means that we could see a rebound and get back above the 20, and then maybe possibly go up to the 50. But all depends on what happens to the CPI report. If the CPI report is strong, then there could be more selling because the momentum indicators are quite weak. But if the CPI reports is friendly to the market, I could easily see price moving up at least to the 50-day moving average. And then you've got the 200-day moving average up here. So there's quite a bit of overhead resistance, but we'll take one step at a time. This level needs to hold around 138. It shouldn't go below this level. If it goes below this level, it shows that the bears are still in control and the bulls are not ready to step in and defend the zone. Microsoft is just looking weak. It lost almost 5 points today and looks like it's going to go to the bottom of this channel. You can see that this channel is drawn using the highs. There was a reaction at this level, so we could very well see a reaction, but Microsoft is among the big tech one of the weaker ones. If we look at Amazon quickly, Amazon needs to hold this level, so this is around 112. So Amazon needs to hold this level, because if this level is breached, you can see there have been few interaction at this level, then the 106 level comes into play. Resistance would be the high right here around 123, and then you have the downtrend. But the momentum indicators are weak. MACD is well below the 09. RSI is around 38. So we'll see whether or not this level can be held, but this needs to be held. Otherwise 106 becomes exposed. Nvidia, so Nvidia continues to move lower, so within this channel you can see it's now just above the channel. You can see that there were a couple of other reactions previously, and then there was a modest bounce, so we could see some oversold bounce, but keep in mind that this channel is sloping downwards, so even if there's a bounce, it can continue to slide down along the bottom of the channel unless there is a rebound in the overall market. Then we could see a little bit more sustained rally. But overall, because of the weak momentum, any rebound is likely to be short-lived. So we want to see MACD moving higher and get back above the 0 line. That would basically change the momentum to positive from negative. So I guess that's all for today. Thank you very much for watching the video. We'll keep watching the market and come back with another video tomorrow. Wednesday and Thursday will be the important reports, and we'll see what the market, how the market reacts. Thank you very much again.